So we can do a lock and shop. So if someone comes down and they're qualified, we can do a pre-approval and we can actually lock their loan before we even have a home. So we can do some things that are definitely outside the box to protect people from this rate environment that we face, these days.
Welcome to another Tuesday Tips. If it's the first time you've been to my channel, my name is Lee Bricky, and here we talk about real estate, mortgages, and money. We're joined today by Brent Starts from Unitas Lending, and we're talking about real estate, mortgages, and money, right, Brent?
That's exactly right, Lee.
All right, so it's been a crazy week after week here, so figured this week let's get back on and talk more about what is available out there for the folks when looking for a mortgage right now. I know that my experience this week has been that clients are calling me kind of freaking out a little bit that their mortgage rate's higher than what they expected on new construction. And I know it's becoming a problem with builders because rates have jumped so much. Some of these buyers have actually jumped out of their debt to income ratio. So I know that a few have been sent over to you. I've had some comments where I've sent them to you. And, I want you to go over what you can do for these folks buying new construction first, because I think this is really going to be a big problem this year, especially as we move along. My last video was about buying new construction. If you're buying cash, it's okay. If you're doing a mortgage, you might end up in some issues, but you deal with United Wholesale Mortgage, and they've come out with a lot of new programs. So let's talk about that first, about how we can lock these rates, how early we can lock them, because a lot of these builders won't lock more than 30 days. And if you're closing this summer, you could be in a whole different rate category in Q2, Q3, and especially Q4. So tell us a little bit about what UWM's come out with and what you're seeing right now on the mortgage side for rates.
Wow, great. I did watch that video, Lee. That was wonderful information. There's a reason you hit 1,000 subscribers, Lee. It's information like that. You know what I mean? That's so timely. I mean, no one's thinking of this stuff, and yet it's a critical thing, especially with someone's in the middle of the process and then they're facing rate risk, right?
Right.
And so, yeah, I mean, interest rates jumped, and I think that's what spooked a lot of people. I think it was initial knee-jerk reaction, frankly, maybe a little overzealous as far as the rates going up to the degree they went up. We're seeing some improvement here in the last couple of days, but yeah, they jumped pretty much a half point, from 3.2 roughly to 3.7, all things being equal. But some of the things we have, and things that are available, we can lock out.
And real quick, I just want to, half point is how much on your mortgage on, let's say, a $400,000 home.
Oh, you're going up, $150. I mean, that throws a lot of people out of, where they wanted to be.
Right. Yeah. Exactly.
Yeah. And so, sometimes it's a debt ratio. I mean, it's just math, right? I mean, you can't qualify anymore. And so there's strategies that we use. We look to pay off other debts, things like that. We see what we can do sometimes to improve their FICO score. We have a what if scenario that we can, hey, if we can get somebody up to that next echelon of credit, quality, then the rate can be reduced a little bit. So there's some strategies that we use that way. That, I always tell people there's, the three things that basically set the rate are, the income, credit, and down payment, those three things. And so, and then we tweak those things as best we can to make them look as strong as possible to an underwriter, by improving the FICO score, whatever we need to do, the way they look at income and self-employed, adding back, depreciation, all sorts of little things that we do to maximize income and maximize their credit, and then to work with what down payment they have, or get mortgage insurance, the best mortgage insurance to cover the down payment if they don't have one. And so those are the things, but then we watch the market in real time. A lot of times people don't know this, but mortgages are traded as bonds. They're bonds that are sold on the stock market, stocks and bonds. And so that's one way that we can, lock on a great day. We locked one of your clients the other day, just because it was a good time to lock. And once we get, inside that 30-day closing period, the rate risk is shifted to the lender when you lock, because if rates get higher, they can't charge that higher rate. So that's why you saw a lot of the lenders, stop locking loans entirely until, or in some builders, because that, hey, they don't want to be held to that rate. Yeah.
Right.
Yeah. But we can lock out.
So how far can you lock out?
Yeah. 180 days. Okay. I mean, we're out 6 months. So, and so we can do a lock and shop. So if someone comes down and they're qualified, we can do a pre-approval and we can actually lock their loan before we even have a home. So we can do some things that are definitely outside the box to protect people from this rate environment that we face, these days, and quite possibly make the deal happen versus not.
And is there any fee to lock for someone to lock that far out, 6 months?
No, we're not charging for that. And so that's another thing. So we're getting that rate risk off the table entirely. And I think that's, right now, after that show you did, I was so excited to see it, frankly, because there are ways that you can avoid that.
Right. And I have a client that just builder tried to locking at 3.85 and or 3.8% and for 6 months, and they were going to charge them $8,000.
Right.
So, it's a real problem. So that's good. So people can, come down here, they can start shopping, lock the rate for 6 months. If they're in new construction, I know, I'm always been a big proponent, that if you're buying new construction, you probably want to go with the lender on the builder side because of, you're going to get, the concession, which is usually right now about $5,000. But I mean, if it's between you getting that concession and losing your home, I think it's a good idea to reach out to a lender like yourself and say, hey, look, let me go ahead and lock this rate. I mean, if the builder gets aggressive, I've told many clients this in the last week. Hey, look, if the builder gets aggressive right at closing and says, hey, they'll match the rate, no harm, no foul. Brent's not going to, curse your name or anything. He's here to serve people like I am. This is what we do for a living, and we like to help people as part of this channel. So, I think it's a good idea that people that are on a schedule, I think it's a good idea that people that are on a budget make sure that they lock their rate early with a lender like yourself so that they don't have any worries. One of my clients, they're right there on that line. The lender called them up and said, hey, look, the rate has gone up so much. It's blown out your DTI. She's upset because she's about to put her house on the market to sell it. And, if she doesn't know she's getting the house and she doesn't know what the rates are going to be, what's she going to do? And the lender won't lock more than 30 days out. This can be a huge problem. And she needs to sell her house out west so that she can buy this house. But how can you put your house on the market 30 days before knowing that, hey, the rate's locked, now I'm able to qualify, and then expect to sell it, close on the new home? Because the second thing that these builders don't want to do is they don't want to hold your house. So if you're not there to close on it, they won't close with you, and you're in potential risk of losing your escrow. And these escrows are 10 to 20% right now. So I've gotten a few comments, and I'm going to say it again right here, that I am of the belief that, hey, if you're on a budget and you're not buying cash, you're mortgaging the house, it's a good idea to get a backup plan going with a lender, whether it be you or someone else, that can lock the rate 3 to 6 months before the closing. This way, you're locked into that rate. You're not worried about, am I going to be able to afford this house when the time comes?
Mm-hmm. It's a price of certainty. You're right. That's exactly right.
Because it would, even if they wanted to buy down the rate, it would cost them more than $5,000.
Right.
That's
a great point. That's exactly right, Lee. That's a great advice. I was happy to see that video. I wish I would have made it myself. It was good. It was good.
So what else is going on? I guess there's a couple other things that are happening with United Wholesale Mortgage. Just to let people know, you've been using them for several years. When they were a small company, you actually met with the owner, flew out to California. They're the largest lender in the country right now, them and Penny Mac. It used to be where, we want to use direct lenders. Now it just makes so much more sense to use a mortgage broker, so that you can use UWM and Penny Mac because they only will work with mortgage brokers. So they're really aggressive. They were really aggressive before we went into, pre-COVID. When rates were 4%, they were in the 3s. So tell us what they're doing now. They're doing some really cool little things, kicking some money back to clients of ours. And so go ahead and go through that.
Yeah, some great ideas. Yeah. So, in this market, lenders, they get their, their margins are being squeezed right now, right? Their cost of funds is going up. And so, we want to, capture market share and along with everyone else. And right now, we're offering a $600 credit for purchases. They have to fall within the credit guidelines that they work with, but, 620 FICO score and up. So that's one thing we can do to help, mitigate some of the costs that people are facing in this environment right now, what's going on. Another thing we do is we obviously we watch rates in real time. So we lock on a good day. That's another thing, that makes it better, because there's a, the rate risk is like you said, it's longer, if we're locking for longer periods, we're taking the risk off the table. But there are great days to lock. I mean, so we can still, watch for those opportunities and close them up. The other thing we do too, to keep, a lot of our borrowers that we work with, Lee, a lot of them, can do a 15-year mortgage too. So it's more about deploying capital at the for their greatest advantage. In other words, if we can still get a loan in the 2s with a 15-year, they can keep their cash working for them and put a mortgage on a property, and they're earning above 2%, and so and it makes sense. Their home's appreciating certainly much faster than 2.75 or whatever the rate is on a 15-year. And so there's some things like that we do. And then of course the adjustables will start to come into vogue again, the 5, 7, 10-year fixed. So if someone's going to be in the home, they know they're not going to be in the home more than 7 years, that will start to become attractive as well. So those are being offered as well.
Perfect. So anything else that you have that, might be good for, folks to hear right now, because we're going to come back in 2 weeks and go ahead and go through what's up and what's going on with the mortgage industry and money and what's happening in the real estate market. Anything else that you want to add?
Yeah, I mean, we're doing jumbo loans now too. So I know as the market is becoming more expensive, we're working with those jumbo loans as a great jumbo product that actually UWM came out with, and we're approved to fund as well. So up to a couple $1 million and just a hair over conforming rate. So very, very competitive. We weren't competitive in that space. I referred that business out. As you know, Lee, if I can't, do the best job, I tell people who can. And so we're competitive in that range. And we've been working on locating a lender that can fund those types of loans, compete with the Wells Fargos and some of the other guaranteed rates, some of the others that had those types of investors. So excited to offer those programs now as well.
All right. As far as the market goes in Port St. Lucie right now, still clicking along. There's lots of inventory though right now. So, we're finding homes for people way easier than we did last year. I think as we move into closer to spring, that's going to become a little bit more difficult. I can tell you that probably mid-February, March we have a bunch of clients coming into town mid-February, March, and April, selling their homes in other states, coming here to Port St. Lucie to buy. So it's a great time to buy right now. Taylor Morrison right now is kind of pulling back on to-be built. They're having some supply chain problems, I would say. I was just told to let everybody know they're pulling back. They do have the spec homes, so they're not right now doing any to-be built, but everyone else is clicking along. And actually build times for Mattamy homes has decreased because of the building department doing such a better job. A lot of the scattered lots are still a year out. We do have a house that we just sold, you and I, that's a 4-bedroom, 3.5 bath, almost 2,300 square foot, just a beautiful home. It has a little mother-in-law entrance to an ensuite on the side. So we're going to try to, you know, put that house out, walk it so people can see it. But that home's selling for under $500,000 in the scattered lots, which is the non-HOA area, sitting on a 1/4 acre lot. So it's a really, really nice house. Lots of great details in the house, crown molding, things like that. So we're gonna put a video together and let everyone see what this home looks like. Other than that, if you have any comments or questions for Brent or myself, please leave them in the comment section below. What we're going to do is we're going to collect your questions and comments, and then the next show we do, we're going to answer those questions and comments for you on camera. But we'll answer, if it's important, we'll answer it right away through the comment section. I always reply to my comments, as anyone that leaves comments knows. So go ahead and leave comments in the comment section. If I don't have an answer for you, I'll give it to Brent. He'll get an answer for you, and then we'll cover that the next show we do here. And again, if this is the first time you've been to our site, please don't forget to slap that subscribe button right there, ring that notification bell, and you can watch our next video on what's happening in the Port St. Lucie market when buying construction that is a resale and it's over 15 years or older construction. You can watch that video right there. Be kind to each other, and we'll see you next time.